everyone, Eric here. Thanks for tuning in. Today I'm going to be interviewing one of my close friends. His name is Chris Cabahug, and he has made an absolute killing in the stock market by investing primarily in Tesla back in March when the market actually took a huge dip. So without further ado, super excited to introduce my guest, Chris. Why don't you talk a little bit more about yourself and what you do in your spare time aside from trading stocks?
Yeah. So my name's Chris. Currently, I work as a property manager in LA. In terms of goals for 2021, my goals are similar to yours. I think it's a net 250K.
Cool.
Actually, I do have a side hobby. It's kind of like, I guess, a hobby now, but I collect tarantulas.
Oh, what? Okay.
Yeah, just collecting tarantulas. But funny enough, tarantulas are actually also a good investment.
Please elaborate.
Yeah. So basically, for example, so tarantulas are funny because like when you buy them, like really, really small, they're not that expensive, but as they get bigger, depending on the species too, they get pretty expensive. So for example, I bought a tarantula for like $50 as a baby, and right now it's like maybe 5 or 6 inches. So if it turns out to be a guy, it'll run between like 140 to like $180.
Okay.
And if it turns out to be a girl, it could be in the low 200s to mid 200s, which is like a pretty solid return on investment. And I have like, I think like 5 of those going. And then if you add in the cost to obviously like feed them and you subtract it, it's still net positive, like a pretty solid ROI. Yeah.
Well, I mean, I'm pretty fond of your investing style and how it's you the other day you were talking about investing in like it wasn't even a house, it was just like storage containers or something that turned
Yeah.
or something. So tell me a little bit more about that, and also like before you move on to that, like what is the value in the tarantulas, and like why is there a difference in value between like
Yeah.
males
So
and
that's
females?
a great question, actually. So, number one, the guys, they don't live as long as the girls.
Okay.
I think that's similar to real life, actually, too, right?
Right.
So that, and then also the girls obviously can lay eggs and reproduce.
Okay.
And dude, if you get like a rare tarantula and then you somehow, they do this is what breeders do, and you breed it, and then that tarantula has babies, I shit you not. If you sell all of them, for example, one baby is like $80. It could run you up to $80 for like one of the rare species.
Uh-huh.
And then there's like 200 to 400 of those in an egg sac. So you can do and then this is the thing, you can have multiple tarantulas. I actually tried doing that, but then all the babies died, so that was horrible. But because I
Wait,
didn't have the time to do it, it's
so you're
really
telling me
delicate.
that sorry to interrupt. So you're telling me that a female tarantula, when she lays eggs, she can lay like 200 of them. So
Yeah.
theoretically, like you're gonna have a couple hundred baby tarantulas that you could
Yep.
sell, and that's where the investment lies.
Heck yeah, dude. I bought one that had babies, but the thing is, like, between work and because like I was working like a lot, I
Mhm.
couldn't take care because the babies, they're very delicate, like initially, until they get bigger, then they get a little bit more like you don't really have to do much.
Mhm.
But I just didn't pay them enough mind, and they just started dying, and I didn't have enough time to like put more focus into it. And eventually I got
Murder.
five. Yeah. So that's why I've got out of the tarantula business. But I still have a couple, and then when I do sell them, I will be positive on the ROI, like maybe like a couple 100% ROI,
Yeah.
minus all the cost of keeping them, of course, still positive.
Chris, very unconventional investor over here.
Yeah.
Yeah, tell us a little bit about the storage containers too. I remember you were telling me
Yeah.
about that a few months ago, and how there's I guess there's a rise in investing in those types of space.
Yeah. So that's an interesting one too. So let me start off by like where all this weird making money stuff comes from. So basically,
Hmm.
I was one day I was like working in Beverly Hills at this building, and I was like thinking like, oh my god, these people are so rich, right? I was like, I wonder how one becomes that rich, right? And so I was just doing the math of like all the ways you could become a millionaire. And the one that stuck with me the most in particular was like if you start with $5,000 and then you double it to 10 to 20, 20 to 40, you
Hmm.
only have to, if you start with five, you only have to double it, I think 8 times, if I remember correctly, to get to a million. And
Okay.
then so I started thinking, I was like, okay, I could probably get to 20, 40, whatever. But eventually I need to start figuring out ways to keep doubling my money, right?
Mhm.
Because like, you can double your money in the stock market, you can double it on a real estate flip, like all these different types of things. So then I was like, okay, what's another way, like when I get into the hundreds of thousands, what's another way to double my money, right? Because the key is you need to focus on doubles, right?
Mhm.
Especially like you can kind of scale. And then so that's when I came up with the container homes. So I was like, okay, for one, working in property management, it's extremely expensive to maintain a property. Two, properties are extremely expensive in Los
Mhm.
Angeles.
Especially,
I
yeah,
was like
California.
what are like no millennials, like average house in California, specifically Los Angeles, is probably like maybe like 6 to 800,000. So I'm like, okay, there needs to be a place for people who are young professionals, like, in their early 20s who do want to buy a house to go. And I mean, like, unless you're, in your early 20s and you have 6 to 800,000, like, you can't really buy a house. So that's what I thought. What about shipping container homes? Because I'd seen a couple of them and they were really, really nice. And I was like, if you just bought a lot, like, what's the cost of land? And I kind of did some research into that. And then also I did some research into the cost of actually building the container homes, which I think if I remember correctly, is like maybe 40 to 80,000. And then you sell those for like a couple 100,000 or something like that, right? Two,
People
three
are
hundred
buying
thousand.
storage containers for a couple $100,000.
Yeah, I mean you could. And also like on Airbnb, I've seen some that are like storage container homes that you
Mhm.
just even rent out. So maybe even just Airbnb it that way. Like they're doing like pretty good with those too, honestly.
Where are these like located? Are they like in lots or like
Um,
where?
the one that I saw that was on Airbnb, that one was in Tahoe, and I heard like a lot of good things about it. Like it was just killing it, and I was like, what if you did that, but like in like a pretty decent area? It'd be a really good first starter home. But obviously, one of the problems is like the banks are not gonna give you a mortgage on a shipping container. So then
Okay.
I was like, okay, like you'd basically have to fund that. Like you'd have
Right.
to have some type of financing. But
Hmm.
yeah, maybe when I get into like the higher six figures and I need to double, then maybe that could be it, or how much it would cost. Yeah.
Yeah, well, I mean, you definitely have, like I said, an unconventional way of looking at investing and making money. And I think that's a pretty good segue into, how you've seen success within the stock market. I mean, I personally don't know anybody that has seen as much success as you in terms of trading. And I remember when you told me about this deal that you're going to be investing in Tesla, I said, bro, like, I wouldn't put all your eggs in one basket, but
Yeah.
tell us a little bit about that. And I mean, obviously it worked out for you so far. So yeah, why don't you elaborate a little bit on that?
Yeah. So I'll start a little bit at the beginning. So when I first started investing, I think it was beginning of 2019. Oh no, it was October of 2018 is when I first started. I
Okay.
had I had a For some reason I had a second car and I sold it. And then so this is very
You had
cute.
two
So I had
cars.
this car. Yeah, it was dumb.
Okay.
But I sold my second car and basically I got like 4,500 from it. I took 3,000 and I paid off my MacBook just in full. And then I had 1,500 and I was like, okay, listen, I know if I put this in my bank account and I see it there, it'll probably get spent over time. So I need to put it somewhere that I can't tap into it.
Okay.
And then so I was like, I've heard a lot about stocks, and I was like, you know what? Like that's probably better interest rate than what I'm getting at my bank, which is Wells Fargo, which is like 0.01.
Yep,
I'm
definitely.
like, let me just put it in the stock market and then see what I can do. So I put it in there, and literally there was like nothing, like no, like I did not know that I would do this well. Definitely, it was just kind of for fun.
Mhm.
But what I noticed is like also too, like before this I used to play chess for fun, and then like before that like Clash of Clans. But then I was like, I need a mentally stimulating game that actually pays me money, because chess is fun but you don't get any money, right? I was like, okay, I need something that's like strategy, because I like strategy games. And I was like, but that can pay you really good money. And so then I thought, oh wow, the stock market. And so that's why I put the
Okay.
1,500 stock market. So for the first year, I'm not really doing much. Like I'm kind of just buying, blue chip stocks, just, testing the water, seeing how things go, and just looking at the chart.
On what app, what trading app, if you don't mind me asking?
Robinhood,
Okay.
Robinhood. Yeah. So just doing that. And I started to notice patterns. Like I was seeing some blue chip companies that would just, for some reason, they just dip, right? And then
Mhm.
I would wonder, like, why are these companies dipping? And then you look at it, usually it's like bad press or whatever, like some random incident, and then people like panic and then they sell. And
Right.
then eventually I was like, okay, well, I kind of want to learn more about this. So then I started researching Warren Buffett and Charlie Munger. And for basically the entire year, I just like watched their videos
Hmm.
over and over and over again, like everything I could find. And then, yeah, I just did that. And eventually I kind of understood a little bit, at least I think I understood a little bit of what they were trying to say.
Okay.
And yeah, so basically I was like, okay, my basic strategy year one was like, okay, I'm going to get a blue chip company that dips and I'm just going to buy the dip. Because basically there's only two options. Either one, it'll continue to dip, in which case it'll go to zero. But I thought that I mitigated the risk by buying blue chip companies that could not go to zero.
Right.
So essentially, when you see the dip, you're like, okay, it's either going to recover and then keep growing, which is why I bought blue chip companies, or go to zero. So anyways, I started buying the dip and then it started working. And I think at the end of my first year, I was up like 5,000, which was crazy to me, because I remember one day I was in Thailand and that was the first time I started making money. Like my account was like, I made up like 600. I think I was up 600 and I was like, cause I only had like 1,500 and I was like, dude, what the heck? You can actually make, cause like for me, that was like crazy. Like that was the cost of like my ticket to Thailand. And I was like, that's so crazy. And I just kept doing that, right? I just kept buying the dips. Mm-hmm. And then you see my account go from like up a couple $100 and then to negative. But then when the dip would recover, because I was only buying blue chip companies, eventually it'd be up higher than the previous high. And it just kept going like that, up and down.
Right.
Anyways, this is where it gets crazy now. So like I did a lot of research over that year of Tesla. And funny enough, I've been following Elon for quite some time. Mm-hmm. And I was like, okay, I need a blue chip company, or at least a company that's pretty solid with high growth, because we need to speed this up. And I was already, I think in the beginning of 2020, like I had already been investing in Tesla for quite some time. And then I eventually hit that first, I think it was like $4,500 of profit. And
when was it?
Like, okay, cool. Huh?
When was this? What like, was this last year?
This was 2020. Like it was in the first 3 months of 2020. I was up like 5,000 or something.
So you went from 1,500 to 5,000, and then in 2019 or 2018?
2020. So 5,000 in profit on top of my so yeah, not including principal. So total my account was like, I don't know, like 4 or 5 plus like a couple thousand or something.
Okay, so you had about 5,000, 6,000 to work with at the start of 2020. Yeah.
Exactly. Okay. So, and then I was like, okay, so this Tesla thing's doing good. And as I did more research, because I spent like the greater part of like 2019 just doing research in Tesla. And then, I invested in it and it started doing well. And then as I did more research, I was like, this could be like that company, right? And Warren Buffett and Charlie Munger, they always say like, life is not about having a lot of opportunities, but it's about fully seizing the few that come your way, right? And I just had this quote in my head. I was like, huh. And Warren Buffett, I watched a video where he talks about like there was this company and it was a really good opportunity, but he did not fully seize it. And he said like something along the lines of like, I might as well have not seized it at all, because I should have just like fully went for it, right? He saw the opportunity, he understood it, but he didn't fully swing. And he was talking about how he regretted that or something like that. Anyways, fast forward, boom, out of nowhere, pandemic, right. Stock market starts crashing, right? It is absolutely crashing. Like I think there was a couple of days where it hit like 10% crashes in a day. Like it was the fastest crash in history.
Right? Yeah, there was one day where I think the Dow fell like 3,000 points.
It was insane. Mm-hmm. And basically at that point, I was freaking out, but in a good way. Because I was like, I already knew. I was like, okay, because I've been buying the dip. Right. Like I've been buying the dip. And the thing is, like, when it was dipping, I was thinking to myself, are these companies fundamentally getting worse? Like, did they fundamentally like get worse in direct proportion to the percentage that they dropped? Yeah. And for most of them, it was no. Some of them you could argue, like, yeah, like the Carnival cruises, like the cruise ship, those did get fundamentally
transportation and just those entertainment stocks.
Yeah. So some of them definitely did, but a lot of them did not. And then I was like, okay, these companies are not fundamentally worse by, in direct proportion to the percentage that they dropped. Mm-hmm. But they dropped a significant amount. And I was like, okay, Chris, buying the dip has worked this far. I think my 4,000 in profit dipped. Basically, we went right down with Tesla. So I was like basically sitting at zero. But I was cool. I was like, yeah, it'll eventually come back. Like I'm used to that. Mm-hmm. And then I was like, okay, this is like a once in a lifetime event. I knew that. And then replay Charlie Munger. life is not about having a lot of opportunities, but it's about fully seizing the few that come your way. And then I was like, okay, this is a once lifetime event. Like this is the fastest crash. Da, 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 da. I need to capitalize on this. So then I spent like a really long time thinking about, okay, of the companies that have dipped significantly that were not fundamentally affected by the virus, which of those companies do I think will not only recover, but may even like get better and also will grow the most? Because the thing is, it's like at this point, it's shooting fish in a barrel. Like I know that if I buy a company that's not affected, it'll recover eventually, and then I'll get like 2-3x my money over. Like I was guessing about like 1 to 2 years, right? And so I was like, okay, 1 to 2x, maybe 3x, maybe even 4x. And I was like, okay, this may be one of the most important decisions I make all year long. And at that point, my goal was 100,000 too for the year. So then I was like, okay, let me think. And so basically, what I did was, whenever I was working and I just had like free time, I would just blast classical piano, and I would just sit there for hours. And I shit you not, I basically spent like hundreds of hours, just thinking, which is insane. Like, and luckily, like I have a job where sometimes I can just sit there and just think. And so I would be getting paid to think about stuff. Actually, they didn't know that, but yeah. And yeah, basically I just spent a lot of time thinking, classical piano blasting, and just thinking. I was like, okay, if I could only put my money in one place. And also, to reference Warren Buffett and Charlie Munger, they always talk about like, this is their reason on why they kind of don't like diversification, is because they're like, okay, like for example, Warren Buffett always uses the example of like Coca-Cola. He's like, okay, to put more money into Coca-Cola and or invest in, like, he basically says like, okay, focus your money on one really good company, because the returns you'll get on the other good companies are not going to be similar to that one. He's like, if there were 5 or 10 Coca-Colas, then yeah, you could like diversify, like do whatever. And then for me too, like I did not have enough money where it made sense to diversify. Like I get it, like once you get into the millions, for me, like I had like thousands. So I was like, okay, I just need to take a shot. And then so eventually I came upon the idea of like, I think the best place to put this money is Tesla. Right? It had been doing well for me. I looked at the stock market and I was like, okay, which one of these will not only recover, but will grow significantly, so that I can make sure that I use my money well. And eventually I figured out Tesla. And then once I made that decision, I was like, okay, now I need to figure out how can I get as much money as possible while the stock market is dipping, so that I can take advantage of this once in a lifetime event. And when that happened, I kept replaying a special quote, which is like, there's never a lack of resources, only resourcefulness. And so like, I just in my head just kept blasting that every single day. I was like, okay, where can I get more money? And so we'll go to the laptop situation. This was a solid one for me. So I had this laptop that was paid off. Like it was like worth like at the time, maybe like all like 1,800, 1,600, something like that.
Okay.
But I needed it for work. And I was like, okay, but I also needed the money. And then so I was like, okay, you know what I can do is I'll sell this laptop, buy the newer version, and then 12 months finance it, no interest. And then so that's what I did. I sold it, 12 months finance. And then I put all that money into the stock market and just started buying Tesla shares. And what was I gonna say with this?
Wait, so if I'm understanding correctly, so you sold your older computer, you quote unquote bought the new one, but since there was no interest, you just didn't make payments on it for the first 12 months. Did you end up returning it, or like what? How did that work?
Yeah, so I sold my laptop, so I basically got like 1.6 to 1.8 in cash, right?
Okay.
And then I bought a new laptop, which is actually this laptop.
Okay.
So I bought the new laptop for 12 months financing, no interest, right?
Okay.
But the thing is, all you have to do is make the monthly payments. The monthly payments are
gotcha.
$3 a month, right? I was like, okay, I have to just divert all resources into the stock market. It was like level 5 emergency mode, like. Because the thing is too, like as the market was dipping pretty fast, like you it can only really dip so far. Like it's not going to go to zero, right? So I knew eventually one day would hit the bottom and then maybe even bounce back up. So I was like, it was like time is of the essence. Like you need to move fast, right? And so I needed to just get money fast. And so yeah, basically I took that money and bought Tesla stock. This made minimum payments. Oh, and then this is where it gets kind of risky, is I was like, okay, COVID was happening. This is in the middle of a pandemic.
Right.
And so I noticed, oh, all my credit card companies are letting me not make or not accumulate interest on the balance. And my job pays like okay. It's like it's okay, like for normal people, not like you, Eric. Your job's solid. But like
Thank
for
you.
normal people, it's like okay. But I had limited positive cash flow at the end of the month that I could invest, and I needed to increase that significantly. And so I was like, okay, my income is like pretty much fixed, and I needed to lower my expenses because I needed more cash, right? And so it's like, okay, all everything that I can put on credit, and I wouldn't recommend this. Everything that I can put on credit, I'm putting it on credit. And so I put everything on credit.
I don't condone my actions. Don't follow me. I'm not a financial advisor. Full disclosure.
Would not recommend, but that's what I did. I YOLO'd it. And then on top of that, I combed through my monthly expenses because that's an immediate ROI, right?
Okay.
It's when you comb through your monthly expenses, you start cutting it, immediate
Right.
ROI. I had already kind of been doing this actively for quite some time, so it's not like there was much. And then I realized, oh my God, my food budget's like $400 a month. I think I can get that to 100. And so,
$100 a month? Is that what you said?
Yeah.
Dude, were you eating like ramen every day?
Dude, 99-cent store. So
oh my gosh,
I cut that, dude. I cut everything that was not essential for survival that couldn't be put on credit, cut. And then my food budget went from like 300-400, which I think that's like normal, right? Like 300-400 is like
per
normal.
month, yeah, I would say.
And then it went to 100. That was horrible.
That sounds
like,
rough.
yeah, it was $25 per week. So I'd go to and there's no eating out. Like you're not eating out with $25 a week.
Right.
So yeah. And then so basically that was cool. There's like extra, and that was every month, like an extra positive like 200-300, which, you know, once we recap at the end, it kind of was worth it. But yeah. So I did that, and then I just started selling everything. I started selling tarantulas. I started selling, what else did I sell? Basically everything that I had that I could sell back, I sold everything. And then that basically maxed out like my selling. So like I kind of sold everything. I was like, shit, I need more, or oops, I need more money. And then that's when they came to like, okay, well, what am I doing on weekends? Let me work on weekends. And then I started Instacarting on weekends, right? So basically it was 7 days a week, every single week, on $25 worth of really garbage food, nonstop, right? In the heart of a pandemic with like basically the stock market in a free fall, and then putting all my resources into the stock market and gobbling up shares. And then you hit a wall. You're like, okay, I've done that. Where can I get more money? Like I need more money. And then so I was like, okay, never a lack of resources, only resourcefulness. And I was like, what else do I have that I haven't sold yet? And then I was like, looking around, I was like, I kind of sold everything. I can't sell this laptop because I need it. I can't sell my phone. I'm already working 7 days a week. And the reason why I didn't pick any other job besides Instacart is Instacart paid weekly, which as the market is dropping, you have to buy the dip. Like I couldn't take the risk. Funny enough, I couldn't take the risk of getting paid every 2-3 weeks or even once a month because I needed cash now. So that's why I chose Instacart. It was really easy to start, and that gave me about an extra $250 a weekend, right?
All right,
maybe 300, which is cool.
Nice.
And then I was like, okay, I need more money, but where can I get more money? And I was like, okay, I sold everything basically. I'm already working 7 days a week, but I need more money. And then I realized I have a car, but then I was like, I can't sell that car because I use it for work, right? But then I did the math. I was like, okay, I still had a balance on my car, right? But then I calculated how much I own the car versus how much equity I have versus how much it's actually worth if I sell it. And then I got a calculation of like, I have like 10,000 or something like that, right? And then so I went to my mom and I was like, hey mom, listen, a little risky, but hear me out. I have $10,000 in my car. I can't sell my car, but I need money. Will you lend me $10,000 for me to invest in the stock market? In return, I will pay you back. Give me till like the end of the year. I'll pay you back with interest. And she was basically like, okay, what happens if this doesn't work, right? Like that's obvious. Like what if this doesn't work? What if it goes bankrupt and it goes to zero? You lose my $10,000. I was like, Scout's honor. If this does not work, I will sell my car because I had, if I sell my car, I'll get 10,000 minus what I owed, right? and I will pay you back, and I will just have no car.
This guy.
And so then I got extra 10,000. She's like, okay. And I was like, and I'll pay you back interest. And she's like, for her, it's no risk, right? There's collateral. The car is collateral, right? There's no risk. It's not like I'm gonna run off on her. Like, that's my mom, right? So it's like, okay, here's $10,000. Boom, threw that into Tesla, bought that dip, and then I was like, okay, now.
Was this still in March, or what is the timeline here?
That was like, I don't think that was March. I think we were in like April or May at that point, right? So I think
still
it was
pretty early though before it started rebounding.
Yeah, so the market was still, I think if I remember correctly, it was still down. So I was still getting pretty good prices on Tesla.
Mm-hmm.
And key thing too here is like, before I did this whole Tesla thing, not only did I do a lot of research, but I also have like a couple of friends who are like into stocks, specifically some friends that are very, like I consider very, very smart. And I ran this idea by them, and I spent like several hours just talking with them. I was like, okay, this is what I'm gonna do. Take this idea and then kick the living out of it. Like, take this idea as much as you can. Like, I wanted to know what exactly is the worst possibilities that you think that could actually happen, right? And I sat with these, like, the friends that I consider very, very smart, and they just kicked, the crud out of it. And basically after that, I took that into consideration. I thought about it for like some time too, and I was like, okay, that's not that bad. Like, if this is what they think is the worst possible outcome, that's not that bad. And I already did my thought analysis. But anyways, so yeah, now I'm like, okay, I've sold everything. I'm working 7 days a week. I've cut my budget to as low as it'll possibly go. Like, I've combed through my budget many, many times. There's nothing else I can cut, right? And then I was like, and I already sold everything. I used my car as collateral. Where else can I get money? And then I was stuck, right? And I was like, okay, I think I hit a wall. But then I was like, never a lack of resources, only resourcefulness, right? And I knew, like, I was looking at the levels of where the stock market is at. I was like, if the market recovers to its existing levels, this is at least like a times 3 or 4, something like that. And at least with the stock that I was looking at, which was Tesla. So I was like, if it recovers, which it should, based on the research I did, then it should be at least a 3 or 4. So I need to be more resourceful, because this is a once in a lifetime. Put whatever amount of money you can put in, and then get it times 3 or 4, right? At least what I thought.
Right.
And so then I was like, okay. One day I was filling in for this guy in this building in Beverly Hills as a concierge, right? The concierge, because it's part of, I work in a company. It's like multiple companies. One of their services is concierge services.
Okay.
And I was filling in for this guy because he was sick. And I was sitting in this Beverly Hills lobby, right? It was super bougie. Like, I'm talking about, this lobby was like the size of 2 houses, just as a lobby, and had these like super like cool pillars that went to like a 40-50 foot ceiling. And in that, it's like this big space, and I'm just sitting there at this little concierge desk, not really doing anything because everyone's just upstairs. It's quarantine. It's a pandemic.
Right.
The building was like older people, so I was just sitting there in this lobby, and I was getting inspired, dude. I was like, this is like such a nice lobby. I need to be more resourceful. And then so my go-to, AirPods in, classical piano on, and I sat in the chair. And I'm like, I'm going to figure out a way to get more money. I need more money. And so I sat in that chair for probably, well, whether I liked it or not, because I'm working, right? So I have 8 hours. And so I spent the entire 8 hours blasting classical piano. And this is over the course of like many weeks, because I also like filled in a couple times for him. So like whenever I was there, I was just sitting. And then one day I was like, I've taken a loan against my car. I've sold all my belongings. I'm already working 7 days a week. What resource do I have? And then it dawned on me. I was like, my stocks. I can take a loan out against my stocks. Margin. Would not recommend.
Yeah, it's very risky.
Pretty risky, but at the levels, I was like, okay, this should work. It should work. And honestly, there's a little bit of a thing that I missed here, is that when you do margin, there's a certain requirement that you have to keep in your account, like a certain balance that is needed. Right. So the first one is the initial requirement. And like, that's how much equity you have versus how much they'll let you borrow against that asset, right?
Okay.
And then there's a maintenance requirement, which is, okay, so this is what you need to borrow this money. This is what you need to maintain this money. I did the calculation wrong. So I thought that I had a bigger margin of safety than I did.
Right.
Right.
Well,
And
by how
also,
much?
huh?
By how much?
It was really off.
What-
Let me just say it was really off. In hindsight, that was like kind of dumb. But basically, I was like, oh my gosh, like I this is how I thought it worked. I thought like the maintenance requirement was something like I think like 50% or something like that, right? So I thought that okay, of the margin that they're lending me, I just need to make sure that I have at least 50% of that money, right?
Mhm.
So if they're lending me 30,000, I need to make sure that of that 30,000 that they borrowed, I have at least 15,000.
Right.
Wrong.
That's not how it works.
That's
Yeah.
not how it works. And then so I was like, oh, dude, I have a pretty good margin of safety. Like,
Mhm.
let me just match what I have. And so I think at the time, oh, this is funny because I think we actually, this is like right after we hung out in the Bay Area in 2020.
Okay.
I think we got tacos or something, right? We got
Yep.
food.
Yep.
So I was sitting on like, I think like 36K in stocks. Most of that was just profit.
Mhm.
And I was like, okay, I can't figure out another way to get money fast. This is it. And then so I margined out. This is so dumb. I would not recommend, especially now. Don't do that. But I margined out 36,000 to match my 36,000, which brought my total account value to like, what is that, like 70 something thousand?
Me too.
Yeah, like 72K. And yeah, so I did that. And then luckily, Tesla went off. Like Tesla went on a run. Like it went on a tear. And it just took off. And with that, so did my net worth. Because my net worth at that point was just stocks, right?
Mhm.
And it took off. And I started making insane money, dude. Like I was making like $5,000, like $2,000 to $5,000 a day, every single day for months, like for months. And yeah, basically it was like, yeah, I was just like, that was the most money I had ever made in my life. And I was shook, bro, because
Yeah,
I was
5
doing
grand is a lot of money, man, per day. For one day, it's a lot of
per
money.
day. Yeah.
Yeah.
Especially like it's like every day. And this is the thing too, like I would wake up around like 6:30 because that's when the stock market like kind of opens.
Mhm.
I'd check my account, right? 6:30 a.m. Check my account, up $2,000. So you wake up every day and you're like, wow, I've already made $2,000. Like I just woke up at 6:30 a.m. Like no one's even up yet, and I'm
Right.
up like 2,000. Anyways, so that was really really good. So basically, how it works is because I was 1-to-1 on margin. How it works is that for every percent, and this is where I like ignorance is bliss. For every percent that Tesla would go up, my account would go up 2%, right? Because yeah, so basically that's what happened. So if Tesla went up 10%, my account would go up 20%. And yeah, so it just went on a tear for a really, really long time. And then I don't know what happened, but I was like, okay, this is not sustainable. Like this can't go on forever. Let me redo this margin equation
Mhm.
and let me double check everything. And upon further investigation, I realized I did it completely wrong. My margin of safety I was far exceeding the minimum requirement of that I have for myself of margin of safety. And I was like, okay, this is insane. I should probably do something about this. And yeah, I didn't.
Yeah,
I was like,
I
dude,
looked at it, I spent time, and I still didn't do anything.
I didn't do anything. And then this is where it comes like full circle, right? Like it's really good. Like when Tesla's going up, and then Tesla did not go up; it started going down. And I remember there was one day in particular. This was the craziest day. Thank God, like because I don't spend any of the money, it doesn't really affect me that much emotionally because I really like it's up. Like it really just feels like a video game because like there's no
Right.
correlation between this money and reality because I've never
Well,
spent it.
that's what Robinhood has really done a good job of is
Yeah.
making their user interface just so easy to use and just
Yeah.
it's just so addicting for people. Like I mean I traded on Robinhood when I was like 19, 20 years old and just getting started as well. And that I would literally check that thing. Like I was interning at a law firm for like
Yeah.
for a little bit, and
Uh-huh.
I was literally checking that thing like every 10 minutes. Like I was just addicted to it. Like it got me into a car accident.
Really? Oh, you're checking while driving?
I was checking while pulling out of a parking space in Wells Fargo, and I got I like hit somebody. Like I was pulling out at the same time that somebody else was pulling out, and I hit her. And that was like,
oh
shit.
no.
And I was on top of that, and make things even worse, I was on the phone with my dad while that was happening.
Oh, you were triple tasking, dude.
Triple tasking.
Robin Hood and the phone call.
Yeah, because I was talking to my dad about Robin Hood, and then I hit the car, and I was like being dumb and like investing in like a bunch of cannabis stocks that I didn't understand, but it was just like, oh, I think a bunch of companies are gonna. I mean, who knows? Like, what if weed becomes legal and da. Like that was like my reasoning behind it. So yeah, that side note, but yeah, I feel that.
Yeah, dude, it's really fun. Like, and I like it because like, I mean, I think it can be a bad thing sometimes because I've seen like some headlines of like that teen who committed suicide because he went like negative like 700,000.
That was a Robin Hood error. That wasn't his error, was it?
I don't know, but I think he was doing options. Like, because to get that type of leverage, you would need to be doing options. And I think that, at least from what I heard, is like I think he may have misunderstood. Like he didn't actually owe that much. I think his account was down that much, but in reality, with options, you can only lose what you buy, what you spend on the option contract. I think. I don't really do options, so I don't know.
Yeah, I remember reading a headline like that. It was like,
it
was like negative what 250 or so, like.
I think it was like 700, dude.
7? Yeah, that's. I mean, imagine being a teenager and then waking up and you owe $700,000. Like, holy.
The thing is, like, I get it because like you're not really coming back from that.
Yeah.
Actually, no. But this is the thing. He's 18. You declare bankruptcy. What's it gone? Like 7 years, right? So what's that, like 25? But I get it. That was horrible. So yeah, I see how it was a bad side for me. Like when I buy stocks, like the confetti's like so. Yeah.
I mean, I just want listeners to get an idea of how risky your strategy was, just to make sure that people know that. And it just ended up paying out like in dividend, like paying out dividends to you. Like, and just, it was, like you said, one of those once in a lifetime opportunities where, we're not having a pandemic every year. We're not having something that's going to, drop the stock market 3,000 points or drop the Dow 3,000 points in a day. And you just leverage that, and you really allocated all of your resources to one company. And not only that, but you cut out a bunch of expenses, and you really just did everything. You focused all of your energy and attention on this trade, and it's paid off for you in, like I said, in dividends. So congrats to you on that one, man. That's crazy.
And also, to recap or touch on your point, I did the calculation wrong when I margined it out. So I thought I had a lot more safety than I did, which comes to this next point, which was the day of reckoning. Tesla got slammed, right? Yeah. Tesla got slammed. And I remember checking my account that morning. And I was like, what's it going to be today? Is it going to be 2,000 or is it going to be 5,000?
Right.
I was like, all right, let's check my account. And I kid you not, I look at my account. It dropped $18,000 in a single day. And I was like, well, it wasn't 2,000. And it definitely was not 5,000.
Yikes.
And then I was like, okay, I need to think.
When was this?
This was like, this was sometime between, what's that month? January, February, March, April, May, June, July. So this was between July and October, sometime in between there.
I think I made a video on Tesla for my YouTube channel around that time. I think Tesla was down a ton. And I was like, should you still buy Tesla? Like, what is like, and for me, like, again, my strategy is completely different than yours. And this year, it's absolutely paid off for you. But I remember when Tesla got hit like that. This is before they got added to the S&P 500 though, and exceeded their expectations and all that, right?
Yeah, and I think a lot of people were bummed because they like didn't get added immediately, right? Mm-hmm. Like that was one of the things that happened.
Right. Yep.
And I just remember like being down $18,000 in a day, like that was quite significant. Like I don't even think doctors don't even make $18,000 in a day, right? Like to lose $18,000 in a day.
One of Tesla's biggest investors too sold off a huge chunk of their shares, and that freaks people out too. I remember
it was like a lot of things, and then like imagine that day whatever happened that day to Tesla, my account doubles it, right? So I was like, okay. I was like, thank God I was up a lot, right? And before that, I had my best day. Like a couple of weeks before that, I had my best day. Like I think of my best day, I was up 20,000 in a day.
Damn.
And so the 18, it was kind of like a slap to the face. And I was like, okay, I cannot take, like, even though I was up, like at that point, I think I was up like, I don't know, like 50 to 70,000 or something, like, or 40 to 70,000. I don't remember the exact amount. But then I was like doing the math. I was like 18,000 in a day. I can't take that many more days like this. Right. And I was like, okay, I need to figure something out. And so I kind of looked at Tesla, and I already knew this beforehand, but I was like, okay, if you look at Tesla's like chart over the 5 years, you'll realize that over the past 5 years, it kind of did nothing. Right. And so that kind of explains the like just take off like into space, because like, and also if you look at the numbers between the last 5 years, like revenue was actually increasing quite significantly over the last 5 years, whereas the price remained the same. So that kind of explained that.
Actually, I thought the prices actually went down a little bit, didn't they?
It might have, yeah. It
Because,
actually might.
well, at least because batteries became easier to access, just more easily accessible, and they became cheaper. So I thought that the prices actually didn't even, like, not only didn't they not go up, but they went down.
Like, yeah, like the revenue went up, like their profitability was going up per vehicle, like everything was going up, but the stock price remained the same. And when I bought it was actually lower. But yeah, I was just like, okay, I need to think, because I cannot take $18,000 days like this in L's. Otherwise, like I'll blow my account. And I was like, and I've come so far. I was like, okay, I had a tough decision. I was like, okay, do I just sell off my margin and eat this 18K loss? I'm still up like, what was it, like 40 to 70K profit, like good. And then I thought, well, what's my goal for this year? And I was like, it's 100,000. I was like, shit. I'm like, how am I gonna do that? Like I think I did the math, and I was like, okay, if I work really hard at my job, keep doing the 7-day-a-week thing, keep saving money, try to do different ways to make money, I think I should be able to make it. But then I was taking time, like this over the course of days, like the 18K day. Thank God, I think the next day was like maybe maybe 1 to 3K or something like that. But it was just like a couple thousand a day, and I was like, okay, she giveth and she taketh away. So I was like, okay, but I have a lot of Tesla shares now, and I was like, okay, how can I not sell any shares? Kind of dumb, but that was my thinking. I was like, okay, it can drop, but realistically, it's not going to drop to the point where I started buying it, right? Because we were well past that point. I was like, okay, I think it'll drop. I think it'll drop like a decent amount, but yeah, let's see what happens. I'm gonna not sell any shares. And I was just trying to get as much money as possible to basically offset the rate at which it was dropping. Because the thing is, like, my margin of safety was not as much as I thought. And the thing with margin is, once you drop below a certain threshold, you get what's called a margin call, in which case the company's like, okay, for the money that we lent you, we do not feel safe. You need to deposit more money. Otherwise, we're going to forcefully liquidate your shares to cover whatever, right?
Right.
And I was like, okay, I don't want to do that. And so I was working 7 days a week doing all this. And I was like, okay. And it got to the point where I was only up like, I think like 30 to 40,000, because it just kept going down. And I was like, this might be it. I was like, I might be forced to sell. I got margin called. I was like, I might be forced to sell, and 30 to 40,000 is better than nothing, but I'm not at 100. So kind of a bummer.
Right.
I was like, okay, never lack of resources, only resourcefulness. And then so classical piano. No, I was in my bed. I remember I was in my bed. I was like, Alexa, play classical piano. And I just lied there, because I was like, I cannot take this much losses. Like I already had a margin call. Thank God. Fun fact, on Cash App, you can actually convert credit to cash. Would not recommend. And so the fee was like, to do this, it was like, there's like a fee, it's like 100 something. And I was like, okay, this credit card, I can get $3,000, like stave off selling any shares and then forcefully liquidating my account for at least a couple more days at this rate. And so I did that, and I put it all there, and I was like, okay, never a lack of resources, only resourcefulness. And I lied in my bed for like probably like 4 hours and just listened to classical piano in the dark, staring at my ceiling, which is cool because my ceilings are pretty high. So it's kind of like on some like, if anyone's watched Queen's Gambit, when she like stares at the ceiling and kind of plays through chess, like that's what I was doing, but with money. And I was like, okay, how can I move money around? Where can I get more money? How can I get more money to cover this? Because I was like, realistically, I don't think it'll go to the original levels, right? And I was pretty confident about that. And I was like, okay, I need to figure out more money. And I just sat there or laid there rather for 4 hours. And I was like, okay, where can I go? And I was like, between where I started and where I was, I had like 40,000. And so I was like, okay, you know what? I know what to do. Wait, hold on, pause. Alexa's actually playing classical piano. Alexa, stop. Sorry. Yeah. So basically, I went to the good old fashioned mom. And I was like, listen, mom, hey, I know you already lent me like 10,000. I'm up 40,000, right? And I made a deal with her. I was like, listen, all or nothing, right? Because I was like, I really wanted to hit 100,000. I was like, okay, this is all or nothing. It's either going to recover or it's going to go back down. And so basically, I did the math and I was like, let me borrow $10,000 more and I will pay you back. And so basically I did the math. I'm up 40,000. I owe my mom like 10,000, right? So if it keeps dropping to a certain point, once it goes to about like 20,000 left, and obviously minus everything, like 20,000 profit, I'll be like, okay, if it drops to that point, I'll still be able to pay my mom back. And that'll be like that's the wall. That's when I'm done. Tap out, sell, take a net zero profit, pay my mom back her money, nothing. I was like, just let me borrow 10,000 more. This is it.
Mm-hmm.
Did that. Thank God. And that in combination with, I was still working 7 days a week. Like I was working, if in fact, I was trying to like, I was like triple working actually. Like I would work 9 to 5, come home and then work on some other things, like try to flip things here and there. Actually, I told you about this. I flipped a taxi on the side.
Yep.
Flipped a taxi. I think I flipped some other stuff.
Yep.
And then also I was working straight through the weekend, all that, right? And thank God the $10,000 held through. I didn't have to sell a single share,
Mm-hmm.
and it recovered and then went back up, and my net worth along with it. And yeah, and then it even just kept going up to the point where I was like, this is far beyond like reason, but
A little bit.
yeah. And then also to recap the whole thing,
Mm-hmm.
on that side note, my mom has her own investment account, and I kind of told her, like, I was like, hey, trust me. I don't know why she trusted me. I was like, trust me, match my trades. And then I was like, hey, this stock, this price may be good.
You're a madman.
Yeah. And then so she did that with like, I think it's like 15 to 20,000.
Okay.
And yeah, so her account basically matched all of mine, minus all the drama because she didn't take any margin. Right. So for her, it was just up, down, up, down.
Right.
It's, there's no margin, there's no risk.
So if you don't mind me asking, between your account and your mom's account, like what percentage increase have you had since March?
Since March. So my account's kind of difficult to calculate just because whenever I put money in or withdraw money, it affects the percentage ROI.
Okay.
Because it's basically connected to the principal.
Well, then
but what I can say,
are you comfortable then just sharing like actually like the profits that you've gained in both of those?
Yeah. I'll share that.
Okay.
So yeah, basically by the end of 2020, I was up 124,000. And then my mom's account, she was up like over like, I think about the same, like 100 something.
Wow.
So
that's
like
insane.
220. But the thing is, Tesla has gone up even more since then. So right now it's like, let me see, I did the math. I have it on an app here. It's like, so to date, we're sitting on on profit like 260.
Holy macro. So
Yeah.
Tesla right now, as of last Friday after close, sitting at 826 per share. That's after the stock split though as well. So it would be a lot more had we included that. So just to give the listeners a little bit of context, in March when the stock market dropped, Tesla was at 85.
Yeah.
So in other words, Chris was investing all of his money in Tesla in March and April when the stock was down and has gone up to around 820 per share. So it's easy to see how he was able to increase his net worth, so drastically over the past year or so. Almost been a year now. It's been 10 months since you started investing in Tesla, give or take, right?
Yeah.
Or at least when
well, technically it's been like, so yeah, for this year, because I've been investing in Tesla since like I think last year actually, or
2019.
Yeah, because at the beginning of the year I was like up like 5K with Tesla.
Gotcha. But you really started revving it up in 2020, and
I did all a man could, you know. Yeah, and also to give the audience a more perspective on the account that my mom has, which she only invests on some of the tips that I tell them, like, hey, I think this would be good, and she invests accordingly.
Right.
That account is up like percentage ROI is like 1,000 like 50% ROI.
That's just ridiculous.
That's like
it's a video game.
It's a lot.
So knowing that now, Chris, you've built up your wealth ridiculously over the past year. What is the next steps? Are you because I mean I've been doing a lot of research on Tesla too. I don't have a dollar in the stock market because as you know I'm looking to buy my first house out here in the East Bay. But now that you've built up your wealth, like Tesla's like just the math right now, it doesn't really make sense in terms of wealth, like in terms of what the business is worth. Just like it didn't make sense in March when the stock was valued at what it was at that point. It also doesn't make sense to be valued at what it is right now. So knowing that, and knowing that the math doesn't make sense, like what are some of the steps that you're going to be taking to preserve that wealth? Are you just going to be leaving it in Tesla? Are you going to be, diversifying those funds? And like, what are you going to do with that?
Yeah. That's actually really like very interesting. Yeah, because obviously I don't want to go back to getting a margin called, and thank God I paid back most of the margin, and in terms of margin that I still have in direct proportion to my equity, like so how much I actually own in stocks, like the value, we're in the good margin, the safe zone that I thought I was in when I mistakenly did the math wrong. Stay in school, kids. Math class, because that was really dumb, honestly. But yeah, so for me personally, because I bought in March and then I've been buying throughout the course of the year, I think the last time I bought was probably in October or something. I can't really sell because taxes will hit me hard. I know it's the new year, so I'm my income bracket's back at basically like 0 or something, right?
Right. Well, yeah, for tax purposes in terms of like realizing in gains. Yeah.
But I definitely want to hold to the over a year or more mark because of
long-term gains.
And then on top of that, I am moving to Las Vegas, Nevada to realize profits, no state income tax. So I can't sell until a year, and I can't sell until I'm an actual resident of Nevada for tax purposes. So that's what I'm going to be doing. But I mean, yeah, that's going to be my plan. And now the fun part is, now that I have at least a decent amount of money, and shouts out to Eric for helping me with that minimalist lifestyle and helping me preserve the capital and not do stupid things with it. Yeah, now I'm just trying to figure out, like, should I keep my money in Tesla? Because realistically, like, this is just my opinion, I think that I can hit $1 million with the shares I have right now, but it'll be like by 2030, which is kind of like not that exciting. Like,
well, you'll be what, 33 or 32 by that point?
Yeah,
in 9 years.
That's whack. We can't like a millionaire at 32, like that's whack.
Well, that's just in Tesla, man. That doesn't mean that you won't be accumulating, elsewhere. I mean, ideally, your net worth is going to increase, because you also said that you were really looking to, diversify your income streams elsewhere too, and not just work a 9 to 5 or work 7 days per week. So, right?
Yeah. Funny enough, now that I'm actually like the stock market's basically recovered, everything's basically like not only recovered, but it's pretty expensive. Like, it's really hard to find like good deals in the stock market right now. So now my focus is like, okay, I have a decent amount of capital. Where would this capital best be used to get a better ROI? And now I think the point that I've come to is that I think it would be the best use of my capital would be to buy my time back. And so my first thing that I'm going to do for 2021 is purchase a year's worth of time, which I did the math. It's about like, it'll be like 24 to 30,000 to buy my time for a year, free and clear. And then from there, I will focus on finding slash making a better way to make money. Because my main income source this year was like, aside from just borrowing money, it was property management and Instacart, which are not the most efficient ways to make money. They serve their purpose because they gave me money right then and there when I needed it to take advantage of that opportunity. But yeah, now, so 2021 is just going to be, I'm going to buy a year's worth of time and figure out a better way to make money. And then once I find that better way to make money, I need to avoid lifestyle inflation and cap my monthly expenses at a certain limit. I think it's like, realistically for me, it's probably gonna be like 3,000 to 4,000, something like that. I'll cap my monthly expenses no matter what my income level is. And then as my income grows, ideally, if everything goes well, my income should increase and my expenses will kind of stay the same. And the difference between my income and expenses, the net positive, I would then reinvest that into the stock market. And also buying properties as well, because I do want to get into real estate, lock in some profits, and especially these historically low interest rates, because now that the market's where it is, there's not so much upside that it's like everything else is useless. Put all the money in here, it's kind of like kind of already there. So yeah, probably real estate.
Cool, man. No, that makes sense. Real estate right now, and you live in Los Angeles, so you know this better than anyone. That it's just absolutely ridiculous right now. So good call. Moving to Nevada right now. I would imagine housing over there is probably a fourth price of properties over there, like maybe 300,000, as opposed to Contra Costa County, the median where I'm from, the median housing price is around $750,000 right now, which is insane.
That's insane.
Like a 4-bed, 2-bath, like just an ordinary house, So kudos to you for that. I just have one more question though before we wrap up, Chris. Just wanted to know really, where you see yourself by 2030. I know that we have a friendly competition going around right now where first person $1 million, wins. We want to be able to hit that by the time we're 30, but by 2030, by the end of this decade, what do you see yourself? Where do you see yourself at? And maybe it doesn't just have to be, career goals, but like personal goals as well and such.
That's a great question. And, first off, I want to say shouts out to us because when we first made that bet, we were a lot further than we are now. Now it's kind of like, we're at least, you can see it. Like you can see it. Like when I started, your net worth was way higher than mine. And I was like, dang, I can't really see it. So I thank God, like everything went well. And we obviously worked really, really hard. Like
now you're kicking my ass, bro. Thanks, Tesla.
if it dips again, I mean, who knows, but this is really, so basically for me, I think my goal is like, and it's funny because I was watching this video by this guy named Bob Proctor last night, because I was just like surfing through the internet. Video came up and he really talks about, like, he was saying like, basically when you set a goal, essentially what you're doing is you're trading your life for that goal, right? For me, like this year was 100,000, and if you can tell by the story, like I did not do anything else. I did have a couple of times where like it was a friend's birthday, like we went out, something like that. But for the most part, like that was probably less than like 10 days out of the year, right? Actually minus February, that's a different story. But for the most part, like you're trading your life for your goals, like to achieve the goals. And I really felt that this year, because like for the 6 figures, like it was a lot of stress, a lot of focus, a lot of no days off, just beasting 7 days a week for months, Right. And then for 2030, for me, my main goal is to definitely multimillionaire. Like that's not negotiable, like multimillionaire, but more so I want to be free. Like I've worked in a 9-to-5. My 9-to-5 now is actually like, I don't really like it at all. It's like, it's quite horrible. It's just not my vibe, especially considering like it messes up your mindset when you make money through other means, and then like going to a 9-to-5 and then making like what you make in like a month in a day. Like, like it messes with your mindset. So like, I know I can't do that, but my goal by 2030 is to be like definitely multimillionaire, and to be, I think I would want to be a full-time investor. I think, but by the time I get to millions, I would definitely diversify a little bit. But yeah, definitely be. I just want to like whatever I want to do, I can do it. Wherever I want to do, I can do it. I can just travel the world and do literally whatever, whenever, and never have to worry about money again within reason. Like I'm not going to be buying yachts.
Right. When you say you want to be an investor, does that mean like getting into like venture capital or like being an angel investor
Yeah,
or
even
your
yeah.
investments?
Yeah, I've been looking a lot into that actually. Obviously, I'm gonna need way more capital, and it's a lot more speculative because
Right.
the lower the market caps are and the earlier a company is in its stages, it's a lot riskier. So
Right.
that, but also like if I can continue to at least do like, this is a bit ambitious, but like 20 to 50% ROI, which I think in Tesla alone, I should be able to do that actually compounded if I don't do anything. I think that should do it for like a decent amount of time. Maybe not this year because it's kind of like taken off, but like after that, I think it should.
Yeah, long term, man. Because like right this year, like or in 2020 at least, I think that Tesla probably did as best as you possibly could have imagined. I don't
Yeah,
think there's any room for anything better than what they did.
yeah,
But like if you put your money on Elon Musk, like
yeah,
you're probably going to do well. Like this guy is
yeah.
managing like multiple companies that are super successful, and this guy's a machine. So
And
at
like,
least
and
for
he
the
became
long
the,
term.
yeah,
What was that?
and like he became like the richest person in the world.
Yeah,
And I think it was 2020 or was that this year?
that
Forgot.
was I feel like it was only a few weeks ago when that happened.
Yeah,
Uh,
that's crazy.
which is nuts. But like if you're investing in for the long run, like EV, especially with the blue wave, with Biden taking the office and the Senate being Democratic and House being
Yeah,
Democratic, they're going to invest pretty substantially in EV technology and just green energy in general. So I think your
yeah,
money is in a good place right now, especially because of that fact. So
yeah.
no, that's
Um,
awesome, man. What else? What else? Anything else?
that's basically, yeah, that's basically it. Be just super rich and just travel the world. And then when people ask me what I do, I'm just gonna tell them that I'm unemployed.
Love it.
Just what's your goal though? What do you think you're gonna do for 2030?
I mean, honestly, like my thing is, I mean, I would imagine it's pretty similar to yours, just having that freedom, the freedom to retire. I mean, ideally, I would like to retire, quote unquote, retire.
Yeah,
Listeners, this doesn't mean I'm not going to do anything. This just means that I'm
yeah,
not going to be working 9 to 5, reliant on one sole income. But
yeah,
by 2030, absolutely being, working my own hours and doing the things that I want to do and not being captive to one income source. That's a
yeah.
given.
I think
Um,
we are very similar in that regard that we don't want to, because like I mean like if you think about it, like the average, like the social narrative is like you go do like 12 years of school and then you go to college
yep.
and then you go do X amount of years in college and then you get a job and then you work until you're 60 and then at 60 something,
Yeah.
you retire and then you're dead. Like that's this, and I
Yeah.
think we're very similar that we want to enjoy retirement, like retire early so that way we can actually enjoy it. But I think it's not as fun when you're old because like, like what are you gonna do? You're not gonna go to the clubs when you're like 60. You shouldn't.
Yeah, man. No,
you know.
I agree. And for the people that have, worked till 60, 60 to 65, no disrespect to them either. Like
Yeah,
they,
definitely.
devoted their lives to a cause and there really wasn't much else out there. Like it was just kind of like a given. You go to college or not even go to college, you just, work for a company for, 40 plus years and you retire. It was a lot more common. But if you're looking at companies now in like Silicon Valley and all tech and like you might see people staying for a couple of years and then moving to another company. The game has just changed. And I think with the emergence of technology and with the pandemic, working from home and just having, a little bit more freedom and liberty to make or to invest. Well, I'm losing my train of thought, but really just being able to do more with your time because of the fact that you don't have to commute as well.
Yeah.
So
And
I
let me
think
say too, oh, sorry, you can finish your thought.
I would, like I said, I just really want to be able to have that freedom, like you had alluded to, by that point. Also, have my net worth be higher than yours, and and be able to travel as well. Vacation, and I would imagine by that point, I would probably be thinking about maybe potentially starting a family at that point as well. So
Definitely. And also, yeah, just touch on the 60-year-old people. No disrespect. And also I noticed that a lot of the people who retired at 60 actually worked a lot because they also enjoyed their job, which I'm somewhat envious of because personally, I don't really know that there's anything that I would enjoy doing that would pay money. Aside from the stock market, that's like the only thing. But especially that I want. And also, I think it's important to note that like this would not have been possible had I been born in like the early 1900s when technology was not there, because like the amount of research that I did was only possible due to the internet.
Right.
And even the margin that I did, like how would you have done that like in 19, like I'm sure you could have done it in the 1900s, early 1900s, but
you would literally have to be on. You would literally have to be on a trading floor or have a broker, and it was all like paper.
And how would I have known the stock market was crashing? Like, oh, in the newspaper, like a lot of these
probably wouldn't have had the opportunity because unless you were an institutional investor or you're already wealthy, like, and that's the thing about that's what like Robinhood and these apps coming to market and stuff. That's making it. I think it's a blessing and a curse because it's a blessing because it allows or it enables people to use their phones literally to invest and not have to have like a buy-in either. There's no trading costs, but it's also a curse for that same reason. It's because like, now everyone's got access and people are like jumping into the stock market without having any idea of what they're doing, just buying Bitcoin and cannabis and all these like super hyper growth companies that like it might pay off. It did for you, but you did a lot more research though than just somebody coming in and just all their money at a company. So
like it's just be safe with margin. Make sure that right. That's the one thing because like luckily for me, like I've noticed that I'm a pretty calm person like normally, and so like the 18K day, like I was just like okay whatever, right? But like I could imagine like you like if you hit like a day like that or something, like you freak out and stuff and maybe do something dumb or whatever. Like so it's very important to do the math right and pay attention in math class.
Well, the stock market doesn't have emotions, so that's another thing that people should consider. But I think that wraps up all the questions I have for you, Chris. So I really appreciate you hopping on the call, man. I think that you really shared a lot of valuable insights for people that are interested in learning more about the stock market. You don't condone a lot of the things that you did. Let's make that clear. But I think it's a good message that you sent to anyone that's still listening right now that it takes more than just I'm just going to throw money at a company. It takes a lot of effort. It takes drive. You just sitting like at your desk or in bed thinking about it. Really, like you said, sacrificing a lot of your money and your time on this one trade. So just something to consider, to think about. For anybody that's listening right now, that's really the type of commitment that it takes to be successful in any facet of your life, not just within the stock market, just in general. So I appreciate you.
Oh, let me add one more thing though, because a lot of people ask me this and I'm trying to do better. I've low-key flexed a lot on Instagram. I'm trying not to do that anymore. But it's weird because like when you make a lot of money, like as a young person, you're kind of like, but anyways, I want to just put this message out there for a lot of people who do want to start investing in the stock market, because a lot of people have asked me this. They ask me the same exact question and my answer is always the same and no one ever does it, which frustrates me, is that if you do want to start investing in the stock market, the number one resource is free. All you have to do is YouTube Warren Buffett and Charlie Munger and watch all their videos. Like literally, I have to shout out to the OGs. Like this would not have been possible, nor would I have the conviction to do what I did if it were not for their advice. Although I don't think they intended me to do the margin.
Probably not. That's what I was. I was like, I'm sure as hell they didn't tell you to do that, but
they would not have told. Yeah, I think they're pretty against it. But yeah, watch all the things that the videos you can find on them, and then all their book recommendations. Read those.
Awesome, man. Well, thank you again. Really appreciate it. And to the listeners, thank you for tuning in. Really looking forward to putting out some more content on this podcast, The Millipreneur. Peace, y'all. We're out.